The EV market is about to reach a tipping point, with prices falling and demand rising. In fact, the cost of owning an electric vehicle is now comparable to that of a gas-powered car. But what's driving this sudden shift, and how low can prices go? The recent sale of 20,000 Teslas by Hertz, a rental car company, has raised concerns about the commercial usability of EVs. Tesla's price cuts on new cars significantly reduced the value of Hertz's existing Tesla fleet, forcing them to sell. This move is likely to have a ripple effect throughout the EV market, as other manufacturers may be forced to follow suit to stay competitive. A report by Bloomberg NEF suggests that the sale of 20,000 Teslas by Hertz could significantly impact Tesla's global sales, considering it accounts for a 10% reduction. This reduction could lead to a decline in the company's revenue. Additionally, there are concerns about the long-term viability of EVs as rental options. This is due to high depreciation rate, which makes them less attractive to rental companies. Will Tesla's price cuts lead to a downward fall in EV prices? Yes. Tesla's price cuts will likely lead to even lower residual values for EVs. As manufacturers compete to stay in the market, prices will stop to drop. This is bad news for those who have already purchased EVs, as their vehicles will depreciate faster than expected. The used car prices will also be flooded with EVs, increasing supply and further depressing prices. The value of electric vehicles is taking a nosedive. Experts predict they could lose up to 20% of their resale value in the next year alone. This rapid depreciation is a major red flag for potential buyers. Not only that, but even rental companies will be less likely to purchase EVs if they know they'll lose money on them quickly. Shrinking demands from both consumers and rental fleets could send prices spiraling downwards. Manufacturers will face a tough decision: either cut price to try and boost sales, or slow down production to protect their profits. The consequences will spread across the entire EV industry. Adding to the pressure is the threat from China. Chinese manufacturers are flooding the market with budget-friendly electric cars, forcing other companies to compete. This price battle looks like a race to the bottom, with everyone scrambling to offer the most affordable EV, even if it means sacrificing profit margins. Chinese EV makers like BYD and Great Wall Motors are shaking up the global market. They're offering surprisingly affordable electric cars, some priced as low as $10,000. This is a game changer, and it's already pushing down EV prices worldwide. Some models have dropped a shocking 20% in the past year, and as Chinese manufacturers upgrade production and expand their reach, the pressure on other car companies to compete on price will only grow stronger. What impact will the influx of used EVs have on the market? A large number of EVs that were leased on 3-year deals in 2020 to 2023 are now coming back onto the used car market. This means a huge jump in supply, which is bad news for anyone trying to sell a new EV. Prices are likely to plummet. Think of it like this: if you can get a nearly new EV for thousands less, why pay full price? Demand for brand new models is likely to shrink, putting even more pressure on those price tags. Edmunds, the car experts, predict a staggering 200,000 used EVs will hit the market within 2 years, boosting supply by a whopping 50%. This surplus of used EVs presents a significant challenge for manufacturers. Already struggling to sell new EVs profitably, manufacturers will now find it even harder to sell their latest models with the increased number of used EVs available. The delicate balance between supply and demand is now tilting unfavorably for manufacturers, putting their profitability at risk. As the EV market continues to evolve, manufacturers find themselves at a crossroads, pondering whether to lower prices or adjust production to navigate the present landscape. The burning question is whether the current trend of declining EV prices will persist. According to Wood Mackenzie, a respected industry analyst, EV prices are expected to decrease by up to 15% within the next year, bringing EVs into closer competition with traditional internal combustion engine vehicles. However, this price adjustment comes with trade-offs. Manufacturers must either absorb the revenue loss or curtail production to maintain profitability. Manufacturers are taking different approaches to address this challenge. Tesla, a pioneer in the EV industry, has already taken decisive action by reducing prices to ensure that its EV remain competitive in the market. On the other hand, Volkswagen has announced its plans to reduce production to strike a balance between supply and demand, minimizing the impact of the influx of used EVs. What factors are contributing to the depreciation of EVs? Several factors are contributing to the depreciation of EVs. The high price of premium electric vehicles means that they have further to fall than their fossil fuel guzzling counterparts. The electric premium can be as much as £10,000 on a car's petrol or diesel equivalent, making the percentage drop appear larger. Additionally, the improvement in battery technology is leaving buyers wondering whether it's a false economy to pick up an old electric car when newer models can get further on a single charge. Bloomberg NEF reports that battery costs have plummeted by 80% in the last decade. That's great news for new EV buyers, but bad news for used EV sellers. Technology marches on, making older models less desirable and causing their value to nosedive. On top of that, all those leased EVs are coming back to the market, which means more supply and more pressure on the prices. How will competition impact the EV market? Competition is a key factor in the EV market. With more manufacturers entering the market, competition is increasing, leading to lower prices. The threat of budget electric cars coming out of China has forced other manufacturers to reduce their prices to stay competitive. The Chinese electric vehicle market is expected to grow up by 50% in 2024, driven by the increased popularity of budget EVs from manufacturers. This growth has led to a surge in competition with many manufacturers, including Tesla, Volkswagen, and Nissan, reducing their prices to stay competitive. Additionally, the increase in competition has also led to an improvement in the quality and range of EVs, making them more attractive to consumers and further driving down prices. The pace of innovation is mind-blowing. Some new EVs can now crack 300 miles on a single charge, but there's a downside. With tech improving so quickly, older models look outdated, leading to fewer buyers and lower prices. Car makers are scrambling to keep up, and that often means cutting prices to move older models off the lot. The future of EVs is uncertain, and prices are likely to continue falling. Manufacturers will have to adapt the changing market and find ways to make EVs more affordable without sacrificing quality. The decrease in prices may make EVs more attractive to consumers, but it also possesses a risk to the commercial viability of EV manufacturers. Only time will tell if the EV market can recover from this downturn. And that's it for the video. We hope you enjoyed watching it and learned something new. If you did, please give this video a thumbs up and share it with your friends. Also, don't forget to subscribe to our channel and hit the bell icon to get notified of our videos. We have more amazing videos coming up, so stay tuned. Thank you for watching, and see you next time.